What up? So I'm on the lookout for finding the best dividend stock to start my dividend portfolio. So over the next month, I'm going to go over some of the stocks I want to see, to look at, to find the best stock to get, right, for my new dividend portfolio. So if we will have a look at the first one I'm going to go over today is the Altria Group. Let's just have a look at this one. So the last year it has been up 22%. The last 3 years 48 and 2, and the last 5 years 71 and 4. And you may think, what is Altria Group, if you haven't heard of it before, right? So if we would just have a look at it, it's a tobacco company. They smokeless tobacco as well. They got brands like Philip Morris USA, which is primarily the Marlboro brand, and the Marlboro is like 40 something market share of cigarettes in the US. So that's pretty huge. Even though cigarettes is quite declining at the moment, I mean it's like 5 to 8% a year or something, they simply just raise the prices. They don't care. They just raise the prices to offset it in revenue. Like, it's simple as that. Cigarette retail share was 45.9%. Very nice. This is stuff like Marlboro, Virginia Slims, it says here, right? Okay. Then they have some other businesses as well. They got like smokeless tobacco, Copenhagen, stuff like that. Then they also got some cigars. They got this one, and this is the interesting one, because this may be the future. Cigarettes is declining, stuff like that, but this is a non-tobacco, like oral products, like snus, nicotine pouches, right? Which you can see here, they have like an 80% ownership of something called Burger Söhne Holding something in Switzerland, right? Which make these nicotine pouches. Then they got Enjoy, which is an e-cigarette. And if like Altria Group back in 2018, they invested in Jules. I mean, everybody remembers Jules, right? And they invested in that, but then due to a lot of lawsuits and stuff like that, Jules, they got banned, and then they have to write down a lot of profits. So in 2023, they completed the acquisition of Enjoy Holdings, which is very interesting, because that's also like a fast-growing business as well, the e-cigarettes and stuff like that. Then they have some joint ventures. They got something Horizon Innovations. I'm not sure what this is. And then they also got an investment in some cannabis in Canada. And they also got something in one of the largest global brewers, as you can see here, which provides them with sustainable income, right? So if that's pretty much the business as it is, if we will have a look at it here, we can go into the detailed financials. We can see here, if we will have a look at the revenue, we can see that for the last couple of years it has been pretty much the same, maybe declining a little bit, but not that much. And that's because most of the revenue comes from these cigarettes like Marlboro and stuff like that. And when the amount of smokers decline, then where do they find the money? They simply just raise the prices to the retailers. Simple as that. But the interesting one about this one, if you have a look at the net income over the last 5 years, it has doubled, pretty much almost tripled, from 4.4 billion to about 11 billion in 2024 last year, which is pretty good, if you ask me. And then if you will have a look at the dividends here, because that's what I'm after. I'm after the dividends. You can see they have a dividend yield of 6.4, which is amazing, right? It's high yield. They have a low payout ratio, under 80%, which is amazing, right? If we will have a look at the balance sheet here, you can see that let's just find it, the total cash and short investments, like this has fallen, but it's declining, like whatever, I don't care. The total assets is declining. It don't really matter to me, I just want the dividends, right? The liabilities is also declining, so that's a good sign. Where was it? The total shares outstanding, right? So you can see that the amount of shares is declining as well, about 2% the last couple of years, which is pretty good, because then they take the cash flow they generate, right? And then they pay back dividends, or they repurchase shares, which makes your little stock worth more in the company. If we will then have a look at the cash flow statement here, because this is where the importance of dividends come in, because it doesn't matter if they had a net income of $1 billion or 100 billion. If the cash flow is negative, then it doesn't work. Then they cannot pay out dividends, then they cannot reinvest into the company, they cannot buy back shares. So even though the net income has increased the last couple of years, then let's have a look at the free cash flow here. If you have a look at this one, it has increased a little bit, not that much. I think most of it is also due to the one they had to write down some of the investment in jewels. But this is pretty much the most important thing. The cash flow, the free cash flow. I mean, it's what makes a business go round, if you know what I mean. And if you have a look at the dividend from the last couple of years, if you have a look at it, 2018 they paid out 80 cents per quarter per share, and today they pay out roughly $1.06. So it's not a lot of growth, but it's still growth, right? In the dividends. And you're not buying Altria because you want to get rich quick, because that's not going to happen. They are not a growth business. They have some growth products like the oral products and the e-cigarettes, but it's at this point it's not so important for the Altria Group business, right? It's the cash flows from Marlboro you want to invest for. So it's not because you want to make a lot of money quick, it's because of the steady income that this will bring to your portfolio, right? So I've looked at this one, and I've also considered the British American Tobacco, because they also have a lot of cigarette companies and they also own some oral products, but Altria is just the bigger brand, so they have a lot of pricing position, right, when they are negotiating with retailers. So it's really what can you say, a good business. Also, if you have a look at it, with a dividend yield of 6.4 at the moment for every $100 you invest, then you get $6.4 every year. Maybe even more, because the last 50 years or 54 years or something, they have increased the revenue, not the revenue, the dividend they are paying out. So it's really only going to grow. It's maybe not going to grow much, but it's going to grow. And you can say that this is like a 6.4 guaranteed return on your money every year, unless they cut the dividends, right? And why should they cut the dividends? They have Marlboro, they have Enjoy as the e-cigarettes, they have On as the oral products. They also have some investments in Kronos, right? The cannabis, it has a lot of hype about it. So it really is just a very strong company. And then you're probably wondering, why should I invest in a tobacco company, or why should I invest in a tobacco company as the first investment stock of my portfolio, right? And I just want to say, there is a lot of addicts out there who takes on e-cigarettes, they smoke them, they smoke Marlboro cigarettes, they drink beer like this Anheuser and Bev, they own Corona, they own Stella, they own Budweiser. Like, so every time someone buys a beer or cigarettes or e-cigarette or oral pouches, or nicotine pouches, sorry, they make money, right? Altria makes money. And you may be thinking, that's bad, or but people are still going to do it. People are still going to smoke. People are still going to drink on a Friday. People are still going to buy it, even it doesn't matter what the price of it is. It doesn't matter what a pack of cigarette costs to the smokers, to the addictive smokers. They don't care. They just want their smoke, right? So I think it's a pretty decent stock to have a look at if you want to start a dividend investment portfolio like myself. I've had one before. I sold it all in January because I had to buy a house, so I need to get some money out of it to get the cash I needed for the investment property, right? But I'm going to start it up again, and that's why over the next couple of months I am going to have a look at different companies. Altria was also one stock I had before in January. I think I had like, if I had to say, I think I had like 50 stocks in Altria. About that, it paid me a lot of money in dividends, which was pretty decent, right? But I wanted to sell it all, and now I'm back again. I bought the investment property, so now I can make a dividend portfolio again, right? So that's pretty good. And also one thing I forgot to show you. If you will have a look at this one, let me just go in here. Let me just go to financials. Then we can see the gross profit of this one. The gross margins. It has increased. So even though that the revenue is not increasing, it decreasing a little bit, then the gross margins are higher, which is pretty good. And 71.7 gross margin, the trailing 12 months, that's pretty good. The last 12 months, that's pretty decent for a tobacco company, right? So I'm not saying that you should buy this company, but I'm just saying that maybe you should have a look into it, okay? Maybe you should just see what the company is about. Also, do your own research, right? You should definitely have a look at it. Thank you. Bye bye.